If I started dividend investing in 2026, knowing everything I know today, I would do things very differently. Because most beginners waste years chasing the wrong stocks, buying random companies with huge dividend yields, only to realize later that high dividends alone do not make you wealthy. And honestly, if I could restart from zero, I'd focus on just a few simple things that actually matter. In this video, I'm going to show you exactly what I'd do if I were starting dividend investing from scratch in 2026, the strategy I'd follow, the mistakes I'd avoid, and the simple portfolio I'd build if my goal was long-term financial freedom. And trust me, one decision in this strategy completely changes everything. First, let's kill one dangerous myth immediately. Most people think dividend investing is about earning cash quickly. It's not, at least not in the beginning, because when your portfolio is small, your dividends will look tiny. You invest $1,000 and maybe earn $30 or $40 a year. That doesn't feel exciting, and that's exactly why most beginners quit too early. But smart investors understand something important. Dividend investing is not about today's income. It's about building a future income machine. That's a completely different mindset. So if I started in 2026, the first thing I'd do is stop chasing hot dividend stocks on social media. You know the type. Crazy high dividend yields, flashy YouTube titles, earn passive income fast. Most of those are traps because many high-yield companies eventually cut dividends or the stock price crashes. Instead, I would focus on strong dividend ETFs first. Something diversified, something simple, something built for long-term consistency. Because in the beginning, survival matters more than maximizing returns. And this is where most people overcomplicate investing. They think they need 20 different stocks, complicated strategies, constant market predictions, when in reality, simple usually wins. If I started from zero today, I'd probably focus heavily on ETFs like SCHD or broad market index funds that contain strong dividend-paying companies. Why? Because they instantly give diversification. Instead of betting your future on one company, you own pieces of many companies. That reduces risk massively. Now, here's the second thing I'd do differently. I would automate everything. Seriously, because motivation disappears. People start investing excited, then stop after 3 months, but automation removes emotions. If I had a paycheck coming in, I'd automatically invest a fixed amount every single month. No guessing, no timing the market, no waiting for the perfect crash, just consistency, because consistency beats intensity in investing. And this is where the magic starts happening. At first, your portfolio grows slowly, painfully slowly. You check your account every day wondering if anything is even happening. But eventually, the dividends start buying more shares. Those shares produce more dividends, which buy even more shares. And suddenly, compounding kicks in. Compounding kicks in. This is the part nobody understands until they experience it. Money starts building money without extra effort from you. That's when investing becomes addictive. Now, if I started in 2026, there's another thing I would absolutely avoid: trying to get rich too fast. Because fast money usually creates fast losses. I would ignore hype stocks, ignore panic headlines, ignore people claiming they turned $500 into millions overnight. Because real wealth is usually boring, and boring works. That's why so many wealthy investors focus on long-term assets instead of short-term excitement. Think about it like planting trees. The person who keeps digging up the seed every week to check progress never grows a forest, but the person who consistently waters it for years eventually creates something massive. Dividend investing works the same way. And honestly, if I could give one piece of advice to beginners starting in 2026, it would be this: focus less on how much money you start with, because the habit changes your future. The amount grows later. Your first $100 invested is not important because of the money. It's important because it changes your identity. You stop being just a spender and start becoming an owner. That mindset shift is powerful, and over time, ownership changes everything. One day, your portfolio might pay your phone bill. Later, maybe your rent. Then eventually, your lifestyle. That's the real dream behind dividend investing. Not becoming rich instantly, but slowly building freedom, piece by piece, until your money works harder than you do.
So if I started dividend investing in 2026, I wouldn't chase shortcuts. I wouldn't gamble on hype. I'd keep it simple, consistent, automated, and long-term. Because that's how ordinary people quietly build extraordinary wealth. And now I want to ask you, if you started dividend investing today, what would be your first investment? Comment below. And if you enjoyed this video, subscribe, because I'm breaking down investing, ETFs, passive income, and financial freedom in the simplest way possible.